An order block is one of the most powerful institutional reference point, and in this video I want to introduce you to the concept of order block, how you can identify them on a chart, and then how you can use it for price entry. So let's start with the concept of order block. What is an order block? Why is it that important for us? So basically we have almost 7 institutional reference points. You can see I have them right here. We have an order block, mitigation block, breaker block, liquidity void, fair value gap, rejection block, and all highs and all lows. These are the 7 institutional reference points, also known as the footsteps of the institutions. Now, we said if we want to use the smart money concept, we want to trade with the smart money, but how do we do that? How do we understand their footprints? We can only understand their footprints and also walk towards their footprints when they leave this kind of information for us to be able to follow through. So this is why we have the institutional reference points that will help us to know exactly what the institutions are doing or anticipate what they will be doing in future. Now, let me introduce you to order block, which is one of the 7 institutional reference points. I will subsequently talk about the rest in the course of this particular course. So if you are joining us for the first time, this is an entire course. I tagged it Mastering Price Action Trading. We are in the 4th lesson, which is institutional reference points, and we are dealing with order block right now. I'm going to break down everything you need to know about an order block, how to properly use an order block for your trading decisions. So we will start with an order block. So what is an order block? Let's start with the definition of a block. Now, when we talk about block in transactions or in finance industry, you are talking about a large transactions. Now, just like I told you that the institutions and then smart money are the main drivers of this market. Whenever you see price delivering from one liquidity side to another, you should know that there is an institutional sponsorship or participation in the movement of price. Now, right here, you can see the definition of what a block is. A block refers to a large volume trade that occurs at once. So whenever you see the institutions coming into trade, you will definitely see their footprints, or you can see the signature of their presence in a trade. This is where the concept of an order block is. So what exactly is an order block? Just like I told you that an order block is actually an institutional reference point, which is also known as the signature of these institutions, where we can see visibly that these institutions are here or they have intention of doing something around that level. So in a typical chart, we have 2 types of order block. We have the bearish order block and then the bullish order block. And I'm going to show you how to identify each of these particular order blocks right here. So let's start with a bearish order block. A bearish order block is said to be formed whenever we have price moving up, right? If we have a movement up like this, something like this, and then the last bullish candle that trade up, if we have a bear candle that covers this bullish candle, let's take for example, if we have a bearish candle like this, something like this, okay, and then it trade through this particular bullish candle and then it completely engulfed it. This particular bullish candle that was last traded by the bear candle is known as an order block. So why is it important? It is important because at that point, we know the institutions are willing to take that order. Just like I told you that the institutions are always looking for a cheap price to take trades. Okay, so this is actually how a bullish order block is formed. I will shortly show you in the live chat. And then let me show you how a bearish order block is also formed after deleting this. Now let me delete this guy. So a bullish order block is actually formed when we have a bear market, okay, coming down. And then we have a last sell candle right here. And then suddenly we saw a bullish candle that engulfed this last sell candle completely. And then we are seeing it visibly. We must be able to see it visibly around this place. I'm going to teach you this very in-depthly. Do not worry, subsequently we're going to talk about more of this institutional reference point. You can see this particular candle traded through this one, okay, and then it broke above this level completely. You can see. So we can say to have formed a bullish order block, this last bearish candle that was traded through completely by this bullish candle. Now let me show you how to identify this. If I delete these guys now, Let me just delete these ones and then show you how to identify them in a live chart. I don't want to just be drawing. I want to show you this in a live chart. This is one of the most powerful concepts you can find in the smart money concept of trading. Now, if we scroll down, let me see if we can see a bearish order block or a bullish order block. So right here, we have price pushing up. We can see price pushing up to this level, pushing up. The last bullish candle that was traded through by the BA candle, which is this down candle, is this one. Let me expand it so that you can see. Let's see it right here. This is the bullish candle that was last traded through by this BA candle, and you can see that it has completely been traded through. This is where it stopped. So you can visibly see this without any difficulty. If you are able to see it, that means we are seeing a bearish order block formed at this point. Now, how this works is that price will always want to reference back to this particular bearish order block right here. So bearish order block is actually a bullish candle that was last traded by the BA candle. That is how to identify a bearish order block. So I colored my bullish candles green. So you will always find your bearish order block as a green candle. So it has traded through it. And then look at something that happened right here. After this bearish order block was traded through by this candle, price decided to go back and test this candle. Let me show you what happened. So this is our order block at this level to this place. The entire candle is our order block, as we can see it right here. If we are to take it to this level, it's our order block. We are actually seeing this as our order block. So this is how you can take trades with this. You can actually trade with an order block, but there are more powerful institutional reference points that I will subsequently show you how to trade with. So price will always want to come and test or to come back to this particular order block. Why? The reason is because the institutions once sold around this level and they want to also participate in selling whenever this kind of thing comes back. So right here, you can see something that happened. If you bring this closer, you can see after this has been traded through, there is another push to the middle of this particular candle. So at this point, we don't expect to see price going above this particular bearish order block. Why? Because if the institutions are selling, they don't want to take loss. Remember, we are trading with the institutions and then we have to be behind them. They wouldn't want to take any loss. The highest this particular candle can push is to push to the mean threshold. Half of this bearish order block is known as the mean threshold of the order block. So you can measure it either with your Fibonacci tool, or you can just look at it with an eye to just know. So 50% of this is known as the mean threshold. So we don't want to see price pushing above or closing above this bearish order block. So this is how to trade with an order block. You can always see this over and over repeating itself. So we can see bearish order block over and over and over again in our chart. Let's find another one. We can see the last, bullish candle that was traded through by the bearish candle, which is right here. If I should take my line and place it right here, you can see this is the last bullish candle that was traded through by the bearish candle right here. If I expand it, you're going to see what I'm saying. This was the last bullish candle that was traded through. If we are to map out this order block completely, we can see to this level. Look at what happened right here. Price came back to test the order block and then immediately it came to the order block. We have price pushing down again to this level. So you can see this over and over and over repeating itself. This is it. It pushes down to this level. So if you are taking trades like this, what you should be looking for is to enter at the mean threshold, or you can enter at this level. There are more techniques to entry, but I'm just giving you this oversight for you to be able to know this is where you should be expecting to enter trade using the order block. So your stop loss will always be above the bearish order block. So if you have your order placed, your take profit should be maybe around this level, or maybe around this level, recent level, and you can see price traded through this level and then pushed up again. So let's check more and more of the order block, and then we can see them repeating themselves over and over again. Let's find a bullish order block. Let's see one right here. This is market coming down from this level, okay? Came to this level, push, 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 and then push. Look at the last bearish candle that was traded through by the bullish candle, which is this one. You can see it. This is it from this level to this level. This is all this level is our order block. So what we are looking at this level is the order block, and it is a bullish order block. Remember, I told you that price will always want to come and test this order block. We don't expect to see price pushing below this order block, and then our entry will be within this order block. So we can see that price pushed up and then came back again and tested this order block. We can see it around this level, okay? And then it took up again, and then you can see price even tested it again in the future. Look at what happened right here. Remember, the bodies of this candle, look at it from here. If you place this, the bodies of this candle are still respecting this level, even though the tails pushed through. What we should focus on in noticing our order block is the body of the candle. Where the candles close, you can see right here, you can see them. They reacted around this bullish order block. You can see it pushed again, and then it pushes price upward. So this is what we are seeing right here. Let's find another bullish order block that we can visibly see. You can see this repeating itself over and over and over and over again in this kind of situation. So I'm going to show you more and more techniques to trade with an order block. It is one of the most powerful concepts you can use. Let's look at this particular order block. The last bearish candle that was traded through by the bullish candle, which is this one, you can see this is an order block. This particular candle, let me mark it out for you so that you can see. This is an order block. Okay, this is an order block. So we have price coming and then it touches this level. Let me adjust this so that you can see it clearly. Okay, so this bullish order block, we see pushes price to this level, and then price came back and tested the order block. This is where we should be entering. Now, to minimize risks, you should always think of putting your stop loss maybe below the mean threshold, okay, or at the mean threshold if you are entering at this point. So my stop loss will be maybe around here. I'm taking profit at the mean threshold of this bearish order block. This is a bullish order block. This is a bearish order block. So at this place, the middle, okay, is where I should be thinking of taking my profit. So you can see even in the future, price came back and took up again. So you can see this repeating itself over and over and over again. This is a bearish order block, and then price respected it. You can see a bearish order block. That is the last candle that was traded through. And then another important thing you must know about an order block is that an order block can be as big as this, and then we can trade through it with more than one candle. As it is seen on this particular scenario, we have this movement of price from here, okay, from here down to this level. This is a very big bullish order block, but we have price trading through it through this level. We have traded through it. We have broken market structure around this level. So this is our order block. You see price came back to test this level, okay. This order block, price came to test it and then took up again, came to test it again and then took up again. So this is how your order block is looking at. So the order block is actually where the institutions are residing. They are just like the footsteps of the institutions. We may not be able to have an insider information, but the chart is actually telling us what they are doing. You can see the last bear candle that was traded through by the bullish candle, price came back to test this order block. If we should extend it to the right side, price came back to touch it, push up again. We can see it repeating itself over and over and over again. So you can do it both for the sell side. You can see the last bullish candle that was traded through by the bear candle, and then price came and tested it. You can see right here, we can take it up to this level. You can see price came and tested it right here. Until we have price violating this bearish order block, we will use this order block even in the future. So the last thing you must know also is that if we are having a bullish market, let's say we have a bullish market where we have a series of higher highs and then higher lows, okay, we have something like this, okay. Now, an order block can be the support level for this next higher low, and then can be the support level for this next higher low. So let's see it live on this particular trending market. We can see this one. This is an order block, the last bear candle that was traded through by this bullish movement. It is known as a bullish order block. We can see that it is acting like a support level for this trend, and then we have so many of them repeating itself. We can see them around this level. The bear candle that was traded through by the bullish candle, the bear candle that was traded. You can identify them over and over and over again on your chart. So you can see repeating itself. The bear candle, price came back to test it right here, this small bear candle that was traded through, and then price came to the middle and tested it and then took up again. So these are actually how to identify order blocks. It is very simple and easy. Make sure you subscribe to this YouTube channel to get more and more update of how to trade with the smart concept idea. If you're finding it difficult to understand order blocks, I think I've been able to show you how to identify order blocks. Subsequently, we're going to talk about other things that are even more powerful than order blocks. As I've shown you in the institutional reference points, we have quite a number of things that are even more stronger and powerful than order blocks. Let me show you that note. Okay, I hope I have it right here so that you can see what we are saying. Okay, these are the notes. You can see mitigation block, breaker block. You're going to see it, and then we are going to go deep. I'm going to teach you how to trade the way the smart money are trading. Okay, so let's take a short time and do some few example. I'm going to show you. You're going to identify order blocks and see whether they can obey and respect price. Let's go to our back testing tool, and then I'm going to show you. So as you can see right here, I have my back testing tool. I will just simply click on play, and then we're going to see I've mapped out an order block right here, and then we can see that price have traded above it. Let's see whether price can respect this order block. So the highest we want to see is for price to come to the main threshold, that is half of this complete candle. Let's bring it down a bit, and then you're going to see it. Everything is on display. So you can see that price is respecting this order block. It came inside the order block and then reacted. Then we took our buy from here. We can see price moving again. Let's see if it can come and test this particular order block and take up again. So I'm testing this to see if this is going to work out. You see, price tested it and then is going. So still our order block is respected. Took our first profit here, came back again. We are taking trades again. Price did not push through or below the body of this order block, so we are still valid with this. We are seeing it happening. Okay, so let's test another one. I just showed you for the bullish order block. Let me show you for the bearish order block so that you can also see. So right here I can see there is a trending market. We can see if I take this down a bit, we have market push up, higher high, higher low, higher high, and then the last bullish candle that was traded through by the bear candle is known as the bearish order block. So let's play this and see if we will push through it. We have pushed through it. Let me stop it. Now you can see it pushed through and even broke market structure around this level. We have violated market structure below this level. Let's see it. Market structure has been violated, and then another thing happened right here. After it has been violated, price is coming back again to the order block. You can see the order block is right here. Price is coming back as far as we have not gone above this order block, which is here. We are still acting as sellers. We are looking for opportunity. Don't worry if the price pushes down. We are waiting for this coming back for us to be able to take the sell. So let's wait and see if this sell will work. Let's play it. Yes, it worked. So this is where we should be entering. Remember, I told you the main threshold or even the tip. I'm going to show you once we reach the top down analysis where you can also view this in a lower time frame to take better trades. So this particular order block actually worked. It happened. It came back and tested it, and then we have seen it has gone to that level. So let's see more order blocks and see how they obey and respect these kind of levels, and then we can make more informed trading decision. This particular movement, this entire candle, the last bear candle that was traded through by this bullish movement, remember I told you we can have more than one bullish candle that can pass through that order block, is known as the bullish order block, this particular red candle. So price came back to test this particular order block. You can see it right here. If I take my tool and map it out from this level to this end, then you can see price came back to test it, still part of the order block, and then pushed up again. So you can identify these guys in almost every single crypto chart you are looking at. So if you are trading in the crypto futures, this is a very good concept that you can use. I'm getting deeper and deeper into advanced things to show you how to use the smart money concept to take your trade. So guys, if you find value in this video, make sure you register with Bybit, my favorite crypto exchange platform. You can find the link in the description, and then join my Telegram group where I keep sharing signals with you. We talk about trades before we take them together. Make sure you are on Bybit before you can join the Telegram group, because it will be easier for me to identify you and show you some of the things we are doing together. So guys, this is all about order blocks. I believe you have gotten clarity about order blocks in this video. Let me know in the comments if you have found value in this. Thank you guys for watching. We will talk about mitigation block in our next class, and then we talk about a breaker block, which are even more powerful than an order block. So guys, thank you for watching. Remember to do me a favor and click on the subscribe button. Make sure you do that. Thank you guys. See you in another video.